What's worse than paying taxes? Paying penalties on your taxes. In this video, I'm going to discuss the most common penalties and how to avoid them. If you're new here, welcome to the Creative Business Academy. My name is Evan, I'm a certified public accountant, and I help creatives navigate the world of accounting and finance. Before we dig in, I prepared a free tax season survival kit, and you can snag that at the link below, right below the like and subscribe button. I've packed a ton of info in there, including checklists, the information you're about to hear in this video, and so much more. If you use someone to prepare your taxes, even better, because this is going to save you time and money by helping you prepare to talk to your accountant. Also, be sure to join my private Facebook group where I'll be hanging out and answering your questions throughout tax season. Let's start with the first penalty, the failure to file penalty. It's pretty self-explanatory, but this occurs when you do not file your taxes on time, and the fine is pretty hefty. It's going to cost you 5% of the amount that you owe every month you don't file plus interest. There are two ways to avoid this penalty. The first is pretty obvious, file your taxes. The second is to extend your tax return. Extending your return will give you until October 15th. Filing an extension is pretty easy in your tax software, or your accountant can pretty easily handle it for you as well. Now let's talk about the next penalty, the failure to pay penalty. This penalty can either occur because you flat out didn't file your taxes and you owed money, or you filed your taxes and you didn't pay. The IRS is so nice that they made the failure to file penalty and the failure to pay penalty two totally separate things. So if you didn't file your taxes, lucky you. You get two for the price of one. There are two ways to avoid this penalty. File your taxes by the deadline and make a payment, or file an extension by the deadline and make a payment with the extension. Just make sure that it's a sufficient payment with your extension, or you'll still face the penalty. But the good thing is, you'll have it minimized with making a payment. You're probably wondering how you're going to make a payment with your extension when you haven't prepared your taxes. Well, this is going to be an estimated tax payment. The cost of this penalty is 0.5% per month that you don't pay plus interest. So this penalty is far less severe than the failure to file penalty. So a key takeaway from these first couple of penalties is if you're approaching the tax deadline and you have time to prepare your taxes, but not necessarily the money to pay, go ahead and file your taxes, but don't make the payment yet. That's at least going to eliminate the failure to file penalty, which is much more severe. Now let's say you're approaching the deadline and you don't have the time to prepare your taxes. Go ahead and file an extension to buy yourself more time. If you have the money to do so, go ahead and make a payment. If you don't, just file the extension, but keep in mind the extension only buys you more time to prepare your taxes, but it does not buy you more time to pay. You would need to estimate your taxes to avoid the failure to pay penalty. The next set of penalties relates to the accuracy of your tax return. There are two categories of this penalty. The first category relates to being negligent or you completely disregard the rules when preparing your taxes. The second category results from you substantially understating your income. The IRS classifies missing 10% or more of your income as substantial. The penalty here is calculated as 20% of the amount you miscalculated or underreported plus interest. The best way to avoid these penalties is really surrounding your documentation throughout the year. You need to be organized, you need to be communicating with your accountant if you're using one, and if you're using a tax software, make sure you're plugging everything in and double check your information. The last penalty we'll discuss is the early distribution penalty. This happens when you make an early withdrawal from a retirement account like an IRA or a 401k account. The IRS gives you favorable tax treatment when you put money into these accounts under one condition. You don't take the money out early. You typically have to wait until you're 59 and a half to withdraw the money. Why the 59 and a half? I'm not sure. This penalty is going to hurt because it is a 10% penalty on the money you withdraw, plus you still have to pay all the taxes on the distribution. Now there are ways you can withdraw money from a retirement account early and not face this penalty. The first is you'll need to reinvest that money into another eligible retirement savings account within 60 days. It's also known as a rollover. Another way you can avoid this penalty is only withdraw the money when it's for a qualified reason. Just as a heads up, when the IRS allows you to do something like this, the reasons are pretty grim. But some of the reasons can be disability, death, medical expenses, IRS tax levy, to pay for higher education expenses, and home expenses. If you do your research and you find out that your distribution is not going to be for a qualified reason, a better alternative may be to borrow against your 401k. So I think that's enough discussion around penalties for one video. If you found this video helpful, I'd really appreciate a like and subscribe, and don't forget to snag those free items in the description below.